What is causing Mark Zuckerberg and other millionaires to gain such fortune? A fantastic business indeed, but what else? They make investments in digital market. They sometimes set the trend or cause market fluctuations. One should closely monitor what the millionaires and billionaires are doing, selling or buying digital assets. Let's decode with me, Pratibha. The United States Securities and Exchange Commission recently reported that millionaires are selling their digital assets. Prominent personalities such as Jeff Bezos, Mark Zuckerberg, and Jamie Dimon have been selling company stock, raising questions about their motivations and whether they anticipate economic challenges. Mark Zuckerberg's sale of Meta shares for $428 million, Warren Buffett's reduction of his Apple position, and Jeff Bezos' big Amazon share sale. Following a break since November 2021, Zuckerberg capitalized on Meta's astounding 194% increase last year. He earned over $500 million by selling approximately 1.28 million shares. Despite this, he retains a 13% ownership in the company, demonstrating a more nuanced approach to portfolio management rather than a complete retreat from his interests. Similarly, Warren Buffett's Berkshire Hathaway reduced the Apple stake by 1%. This change elevates slight is significant considering Buffett's reputation for long-term investing. This decision was made despite Apple's status as a cornerstone for Berkshire portfolio, highlighting the strategic modification that even the most persistent investor make in response to market trends. Bezos' sale of Amazon shares for about $8.5 billion highlights the trend of billionaires cashing in on tech equities. A strong growth, the succession of transactions appears to be more about personal financial strategy and tax consideration than a lack of faith in digital prospects. This selling was filed with the SEC in November 2023 through a 10b5-1 plan. For reference, the Securities and Exchange Commission issues Rule 10b5-1 in 2000, which allows insiders of publicly traded firms to create a trading plan for selling stocks they have. It is a clarification of Rule 10b5, which was enacted under the Securities and Exchange Act of 1934 and is the primary tool for investigating securities fraud. Rule 10b5-1 allows big shareholders to sell a certain number of shares at a specific period. Many corporate leaders employ 10b5-1 strategies to avoid allegations of insider trading. Going back to the original plot, when technology titans Elon Musk, Jeff Bezos, and Mark Zuckerberg sold more than $42.9 billion in stock in mid-December 2021. More to it, according to reports, Elon Musk could offload his Tesla shares in 2024. If this happens, it will lead to great market fluctuations. Not just businessmen, but politicians will be affected, as politicians are also selling their digital assets, but this is hinting at insider trading. When you look deeper at who made certain deals at a given period, it is unclear whether they had insider knowledge. Politicians have been making trades that exceed the rest of the market by significant margin, prompting suspicions about insider trading. Reports from numerous publications appear to show that there was more going on behind the closed doors, implying insider trading by some lawmakers. Brian Higgins is well ahead of the rest at 239% profit, Mark Green by 122%, Garrett Graves by 107%, and David Roser by 105%. Out of these, there is Nancy Pelosi, one of the most well-known. Her net worth is $165 million based on salary, assets, and properties. There are allegations of insider trading against her. Unusual Whale detailed how Pelosi and her husband profited handsomely from Nvidia co-auctions. Nvidia prices increased by 85%. Pelosi made $1.8 million in 93 days, which is 8 times more than her own income. The ruling party was likewise Congress. As a result, these strategic transactions by well-known investors have sparked speculations and alarm among smaller investors. Market participants in the Bitcoin business are concerned about its receptive behavior to traditional stocks' emotion and market movements. Now the question arises, how will it influence the crypto market and you as an investor? While Zuckerberg, Buffett, and Bezos' recent movement reflect a rebalancing of their portfolios in response to broader market conditions, they do not necessarily indicate a slump in the tech sector or cryptocurrency market. Instead, these movements may emphasize the significance of strategic portfolio management. In this scenario, cryptocurrency investors should avoid selling Bitcoin based on the acts of a few well-known personalities. Thorough research, diverse investments, and a long-term view are still essential while managing cryptocurrency. Crypto market dynamics are influenced by a variety of elements that are not present in traditional stock markets. These include regulatory changes, technical advances, and adjustment in investor attitude. Another big factor with the potential to influence the market is the upcoming Bitcoin halving. Bitcoin's historic record since its debut in 2009 has regularly revealed a striking trend. For example, Bitcoin's value fell by 50.78% in 2012, just a few months before the halving event. The pattern was repeated in 2016 and 2020, with Bitcoin witnessing pre-halving declines of 40.37% and a sharp 63.09%. Well, there is a tip for you all. Expert analyst Michael Van de Poppe predicts a price adjustment before Bitcoin's continued growth. For more such crypto information, keep watching CoinGate TV.